Hi, I'm Emily Carter. Everyone is obsessed with AI stocks right now, and almost all of that attention goes to the same name, Nvidia. But today, I want to talk about a company that doesn't chase headlines, doesn't dominate thumbnails, and yet sits right at the center of the AI infrastructure. That company is Broadcom. This is not a story about hype. This is a story about contracts, systems, and control. And by the end of this video, you'll understand why Broadcom might be one of the most misunderstood and most powerful AI companies in the market. To understand Broadcom, you have to reset your definition of a chip company. Broadcom is not about one product, it's about infrastructure. On one side, Broadcom designs custom AI chips and ultra-fast networking hardware that connect massive data centers. On the other side, Broadcom owns enterprise software that actually runs those data centers every single day. So while many chip companies live and die by demand cycles, Broadcom combines hardware growth with software stability. That mix changes everything. Here's where Broadcom separates itself from almost everyone else. Most AI companies talk about future demand. Broadcom shows you the backlog. Right now, Broadcom has $73 billion in confirmed AI-related orders scheduled to be delivered over the next 18 months. These are not forecasts. These are signed commitments. In 2025 alone, AI revenue jumped more than 65%, reaching $20 billion. This isn't about whether AI spending continues. The spending is already locked in. So why doesn't Broadcom get the same attention as Nvidia? Because they play a different game. Nvidia sells general-purpose GPUs to the world. Broadcom builds custom AI silicon for a few very large customers. These chips are designed for one purpose: maximum efficiency at massive scale. When hyperscalers grow big enough, performance alone is not enough. They want control. They want efficiency. They want long-term cost advantages. That's where Broadcom wins. Then came the VMware acquisition. This wasn't about growth headlines. It was about changing the company's risk profile. VMware brought recurring subscription-based revenue into a business that used to be seen as cyclical. Now, when hardware slows, software keeps billing. Broadcom stopped being just another chip company and started looking like a core infrastructure provider. Less volatile, more predictable, more powerful. Let's talk numbers. Broadcom generates nearly $64 billion in revenue, with gross margins close to 77%. Net income exceeds $23 billion. Free cash flow is strong, and the dividend has increased for 16 straight years. This is not speculation. This is execution. But execution comes at a price. The stock is expensive. Valuation assumes Broadcom keeps delivering, quarter after quarter. There is very little room for mistakes. And yes, there are real risks. Valuation is stretched, customer concentration is high. A handful of tech giants drive a large portion of revenue. At the same time, those same giants are developing their own chips. Add regulatory pressure around VMware, and you get a company that must execute perfectly. Broadcom is strong, but it is not untouchable. So who should actually care about Broadcom? This is not a stock for hype-driven traders. It's not about chasing the next breakout. Broadcom is for investors who believe in long-term AI infrastructure spending and value predictable cash flow over excitement. This is a patient stock, a disciplined stock. At the right price, it can be incredibly powerful. At the wrong price, it can test your conviction. So let's talk about where this could actually go. Not hype, not headlines, just scenarios. If AI spending slows, margins come under pressure, and investors push back against valuation. Broadcom could trade closer to its fundamentals. In that case, a 2026 end-of-year price around $280 to $320 would not be surprising. Painful, but realistic. If Broadcom delivers on AI backlog, software revenue stays stable, and growth normalizes. The stock doesn't explode, it compounds. That points to a 2026 price range around $380 to $420. No fireworks, just steady execution. And if AI infrastructure spending stays aggressive, custom chips keep scaling, and Broadcom proves it can grow without margin damage. Then valuation stretches again. In that world, $450 to $500 by the end of 2026 becomes achievable. Not because of hype, but because Broadcom becomes unavoidable. So this isn't a stock about guessing headlines. It's about deciding one thing. Do you believe Broadcom can keep doing what it's already doing at massive scale? Because if it does, the upside won't be loud. It will be quiet, disciplined, and very expensive to ignore. If this video helped you see Broadcom from a different angle, go ahead and hit the like button. It really helps the channel. And if you want more deep dives into AI stocks, real fundamentals, and long-term investment stories that actually matter, subscribe and turn on notifications so you don't miss the next one. Thanks for watching. I'm Emily Carter, and I'll see you in the next one.